On this episode of the AAF Exchange, inflation, interest rates, and the intractable debt. Joining us to break all of this down is AAF President Douglas Holtz-Eakin. Doug, thanks for joining us.
It is always a pleasure.
What's been on your mind recently?
Well, it's the recurring nightmare known as the Airbus, Boeing, EU, US,
back again.
WTO case. I mean, this is my entire adult life. I think it actually genuinely, the dispute began in the late 90s, and so the first WTO sort of complaint was filed by the U.S. in 2004. And the genesis of this was the European Union subsidizing the launch of two different Airbus models, and then there were counterclaims by Airbus that the United States was subsidizing Boeing. The WTO found out that they had subsidized and allowed the U.S. to impose tariffs on $7.5 billion worth of European goods as retaliation for this. They then also found that the U.S. was subsidizing Boeing because Washington State had a 40% lower tax rate on the occupation tax for people in the airframe industry. It was nothing. I mean, really, but you know, so they were able to retaliate, put tariffs on $4 billion worth of U.S. goods. And then we got literally, that was, the teens, and we get to 2021, and everyone agrees to stand down. They suspend all the tariffs. And you think it's in the rearview mirror. We're finally done. And lo and behold, the European Investment Bank gives Airbus $3 billion loan. All the rumors are that it's not a market loan. It's just a disguised subsidy. Boeing wrote to USTR and said, "Would you please take a look at this loan, make sure it's okay?" Part of the agreement when they suspended all the tariffs was complete transparency in these transactions. So we have a right to look at the books. Now they haven't answered yet, so it's hanging out there in limbo. But I just, part of me is like, I cannot believe that they would so transparently do it again.
Yeah.
After all this.
I mean, it's almost like a bad movie they keep rebooting.
Yes.
And I really do need, I might need to listen to make an infographic timeline on this because
it's endless. And the back and forth. I mean, I skipped all the, findings, appeals, counterfuses.
Yeah.
I mean, it was a full-time job.
Yeah.
Keeping track of this thing.
I mean, and this also highlights, I think, just the ongoing problems with trade in general.
Part of me thinks that, let's be blunt, the Trump administration has blown up a lot of the norms that were around international trade. So I think the European Union thinks, okay, fine.
Yeah.
They don't like this, we're going to do it.
Yeah.
And what's the WTO going to do to us? Does the WTO do anything anymore?
Right.
So I don't know how this all ends up, honestly.
So we don't.
It's
is there an
unresolved.
exit strategy in any of this? Is there a solution in any of this?
Yes, it's the same one we're using in Iran. So don't worry about it. No.
For our listeners, my reaction to that, you might have to go to YouTube for that one.
Oh my. Anyway, yeah, this one's I don't want to think about this. I never wanted to think about this again. But there was a little thing in CNBC, and then something got picked up, and I thought, oh no, here we go
again. Well, on that note, let's turn to the economy, which is another fun topic of ours.
Absolutely.
We're still facing a continuing problem with inflation.
We are.
We had CPI data today. Did it tell us anything?
Not a lot.
It
hit expectations. So top line 0.1%, core 0.2%. That puts the core at 2.5 year over year, down from 2.6 last month. So you can declare victory because we hit expectations. There was no bad news surprise, or you can recognize that we're at 2.5 and we've been above 2 for years and years and years and years, and that's not particularly appealing.
Yeah.
So I think the surprise in there, or the only sort of real news that I saw, was shelter inflation once again coming in very light. So The month of July annualized is a 1.1% annual rate for shelter inflation. That's really low, and that's why the core keeps moderating. That's a third of the CPI. So that's like, take away all the Sturm and Drang that surrounds the global energy markets and the Iran conflict. That's an important development. Right? Have low shelter inflation of that type.
Yeah. So I mean, is this on, because this is what the second month in a row we've talked about low shelter.
When the June number came in, I thought, okay, fluke.
Yeah.
Statistical anomaly.
You're right.
It'll revert in July. It didn't. So now, to me, that's real information. So now maybe something's going on out there.
Does it say something about the housing market in general, or?
Now we get to guesswork time. I don't think there's any particular evidence that the owner-occupied sector is suffering sort of big downward price pressures. It's not. So the place where you'd expect to get a response is in the apartment market. And you can build new apartments, and people do. And what we might be finally seeing is that side of the market getting more supply, and that's driving these numbers.
I mean, from an anecdotal point of view, just walking around DC, you see a ton of new apartment
Cranes
buildings. Cranes everywhere. You constantly are seeing apartment buildings 2 months free of rent or things like that. Just to sort of start getting people in these buildings now.
So we're gonna. I think I'm gonna have a chat with Kingsley and just sort of. See if we can do a deeper dive on what's going on.
What's going on there? How should the Fed be reacting to these numbers?
The Fed doesn't have to react to these numbers, and so they should stay in their hole or wherever they keep them between meetings. And they get a couple of price reports. They get 2 CPIs and 2 PCEs before the next meeting, so they will have a lot more data on the sort of scope of inflation. And so that's an important part of it. The flip side of that is the other mandate, the employment mandate, and there that July number, the 20,000 odd decline in top line jobs. Again, that to me feels like the 1 month of data that you want to discard until you see more evidence, because 40,000 of those declines was local education employment, which feels like some sort of weird seasonal adjustment.
Yeah.
So everyone got laid off in June, lost their job in June somehow. That sounds like the school year went too long. They expected them to be gone in May. Instead, they went away in June. Seasonal error. And so we'll see. We'll, do another month and see what it looks like. No one expects the labor market to generate 250,000 jobs. I mean, that's not the world we're in anymore. The unemployment rate remains low, often for the wrong reasons, because people are just giving up. And it comes down, I think, to just the wage number. Are we getting rising wages enough to compensate for the inflation?
Yeah. I wasn't going to bring up the jobs report, but yeah, I did see that sort of explanation over the weekend about we had more winter than we usually do, so things got extended and moved around, so the adjustments didn't pick it up and all that.
The reason you always hear people who look at these on a regular basis say never overreact to 1 month's data is there are a lot of events that are sort of timing issues where they either fall in this month or the next month. And if 9 out of 10 times they fall in May and just once they fall in June, when it happens in June, the seasonal doesn't get it right. And it looks like a big event. And it's not.
Yeah.
It's just a timing issue.
Interesting. So anyway, speaking of the Fed and interest rates, last week, the U.S. Treasury stepped into currency markets to prop up the Japanese yen with its euro holdings, even more a little weird. But why did they take this step?
Because I was trying to have a vacation, and they just really needed to irritate me.
Yep.
And they succeeded.
Yep.
I broke my vacation. I read about this, and I quietly lost my mind. And
much to Beth's happiness.
Oh yes, absolutely. It was great moment in marital relations. If you're ever on vacation and you start talking about Scott Bessent to your wife, you're in trouble. Okay, that's all. That's a very simple rule of thumb. So anyway, so the number one, they intervened on behalf of the yen. So why do we defend the yen? Japan's interested in defending the yen. That's their issue. It's unusual for the U.S. to do that. So that's sort of point number one. And there are a variety of possible explanations like they're allies. We're going to help them in any front. It's hard to believe. Or we're worried about financial turmoil in Japan interfering with them meeting the commitments they got in that Japan trade deal. Remember, there's a whole series of investments. I think it was like $600 billion worth over many years in the U.S. So they could be defending that. They could just, Bessent was a currency trader, and he may just have seen an opportunity here. Who knows? So that's point number one. Point number two is that they didn't just say sell treasuries and buy Japanese bonds and thus prop up the yen. They sold holdings of euros and kept the dollar out of it. So raised the yen at the expense of the euro. They didn't, by the way, call Christine Lagarde over at the ECB first. They just did it. So making friends in high places. And so that's an unusual thing. And the stated reason for that was, or the suspicion is, that they're worried about selling the U.S. bonds or having Japan sell the Treasury bonds and putting upward pressure at the 10-year and 38-year end of the yield curve. And, any upward move in interest rates, they're obviously very tense about. So they try to avoid that. My main frustration with all this stuff is you can't fool Mother Nature. The reason the yen is weakening is fundamentals in Japan. The reason the yield curve is as steep as it is, and we're worried about 10-year rates and 30-year rates, is fundamentals in the United States, especially the fiscal outlook. Fix those. Mm-hmm. You can't paper this over. You can't fool people. And this always looks like, we'll fool them. They won't know what's going on.
Mm-hmm. And they figure it out. Yeah, well, so I was going to ask my next question about, so you're skeptical that this will work, but I don't really think I need to ask that question.
You got me. The trouble is, I got to give this whole speech to myself on vacation, so I'm ready.
I think you just redid your entire Monday's dish in that one answer, so I don't even need to ask my follow-up question on that one.
Okay, sorry about that.
You're good. No. So, what are the implications for the U.S. here?
I maybe there's an objective here I don't understand. That's entirely possible. I think it's just telling that both countries feel the need to defend their currency. The U.S. by omission, Japan actively, and not take on the underlying real weaknesses. And that's been a complaint I have about the U.S. and the same complaint applies to Japan.
Interesting. So now's the time we usually do a trivia, but I forgot to write the answer down. So
this strikes me as a great opportunity. Ask the question and I'm right. Like, you can't tell me I'm wrong.
This is true. All right. Well, here's what I had. As a result of the conflict in Iran, U.S. consumers and businesses have spent nearly $8 billion in additional gasoline and diesel costs. How much on average is this added cost per U.S. household?
Per U.S. household?
Yeah.
$8 billion.
$80 billion.
$80 billion.
I left the zero out.
Okay, that seems like a more reasonable number. $5,000.
All right, and we'll tune in next week to find out if you got the answer right.
Wow.
I mean, but even that $80 billion number is really staggering, and it just shows how this prolonged conflict is really impacting Americans throughout the summer months. And
that's that's just like the gasoline cost.
Yeah.
We're now seeping through the economy, and this is in the inflation numbers as well. Transportation costs are way up. Mm-hmm. Diesel's really expensive. It's gone up much more than gasoline has. It's stayed up. Insurance costs have been up. So putting goods on a truck and getting them someplace is expensive.
Yeah.
It shows up in all the pricing.
We most Americans just see it at the pump, but it trickles into your grocery prices, your household prices, your anything you go to a mart for.
And the long life stuff is why inflation is so difficult to cure. Think about the fertilizer shortage.
Yeah.
Right? When does that really show up? It's not in June, July. Mm-hmm. It's going to be sometime in the fall.
Well, or next year when farmers they probably already had most of their stuff when they went to get produced for this season. But as we enter into another season and there's shortages, things are going to be problematic.
Yeah. So it takes a long time to bring inflation out of an economy. We have learned this now for the second time in the past 50 years, and hopefully the lesson will stick and we will not let it get started again.
Yeah. Well, let's take our mood down even further and end on talking about the debt.
Oh, okay.
The United States is certainly headed to a regrettable milestone of $40 trillion in national debt. This will likely happen in the next month or so. Some people say August, some people say September. What are your thoughts?
Number one, that's a really big number and something that should wake people up. And as we've discussed in the past, I was always of the camp that said, well, there's not an imminent sovereign debt crisis. We don't have to worry about that so much. But we've now had these indicators, downgrades, market volatility, weak auctions that make me think that possibly has to be taken more seriously. So that's not good. In my view, we have already paid the price for this profligacy over the past 25 years in the form of economic growth that's slower by a full percentage point than it averaged in the 20th century. And so that's not good. So there's every reason to do better and reap the benefits of that. But the political will has been missing on both sides. And so can this milestone wake people up? I don't know. I hope so. But
yeah. I mean, a couple of milestones a couple of observations that I had looking at, our chart books. Peterson sent over a pretty cool on interactive website to look at the sort of this stuff. One, interest on the debt is at third.
It's huge.
14%, I think it said. That's a lot. It used to take us a few years to add $1 trillion to our debt. Now it takes a few months.
It's gotten really good at it.
Yeah, it's, practice makes perfect.
Yep.
I didn't think that would apply here, but here we are. And we've talked a lot about having a conversation. We have an election coming up in a few months about these sorts of things, and it doesn't seem like it's happening.
I didn't expect it to show up in this election. It'd be great if it did, but I'm sufficiently beaten and jaded that I didn't expect it to become central. There is now chatter of a bipartisan crowd of senators doing something in the lame duck on what amounts to a process bill by Cassidy and Durbin. You'll note that they are both not coming back. So this is an effort by people who are leaving the Senate, perhaps against their will or retiring. And maybe they can get that over the finish line. I'd be surprised.
Yeah. So on that note, how do we get out of this mess?
There's only one way. First of all, the old lesson is if you're in a hole, stop digging. We're still digging. So stop it. Stop passing legislation that's not paid for. Stop doing reconciliation bills to make things worse. That's step one. Then step two, honestly, just get serious about Social Security reform, which is imminent anyway, needs to be done, is a big part of the deficits that we have, and we need to have a social safety net that's durable. So that's what I'd like to see. I'm pretty sure there has to be a discussion in 2028. It'd be better if it happened faster.
Yeah, I mean, because the trust fund is running out, and we know it's going to run out on the next president's watch.
Yes, and the senators who are being elected now will have to deal with it.
Yeah.
So there is a reason for them to care now, but we haven't heard it in any of the. You don't see people running ads on this issue.
Right. Yeah. Well, something we'll continue to talk about, and hopefully they continue to talk about. So, but thank you for coming on and talking about all these things. And happy football season. It's back. Our long year is over.
I had a terrible dream where I didn't get to see the NFL for months and months and months. And when I did, Aaron Rodgers was still the Steelers quarterback.
I don't want to burst your bubble, but he's still your quarterback.
Oh, dear.
Yeah. Well, I took him in my dynasty league on a 1-year backup situation. So
he's a backup dynasty?
He's a backup in my.
I did not know that.
To Drake May.
Okay.
So this is fantasy football talk, not real football. But anyways, Looking forward to it, and I'm sure we'll have many more conversations over the next couple of weeks as we head to episode 200.
Should be fantastic.
Three to
Can't
go.
wait.
Three to
Can't
go.
wait.
Thanks, Doug.